what's up, everybody? It's Angelo Christian. Thank you so much for watching Talk with Angelo. We do this every Thursday at 6 p.m. Central. Man, it's been a long week, so I hope everyone's doing good out there. We appreciate all of you guys watching the show and the channel. We've been doing this for, I think, going on 7 years now that we've been doing our social media on Instagram, YouTube, Talk with Angelo, I think we've done over 1,400 videos, and then we have almost 70,000 subscribers on YouTube, and I think it's like 8 million hours watched. So I'm hoping that we gave a lot of good value to all the people out there that are, that tuned in and watched those 8 million hours. So anyway, yeah, thanks guys for reaching out. Every Thursday we do this Talk with Angelo, and it's just a real estate market update. We also do our videos during the week. We have our 3 videos that go out, and we talk about different things, updates in the market, programs, stuff like that. And we're a direct, nationwide lender. So always, if you have questions, you need help with funding, feel free to reach out to us. That's why we're here. So. And if you have any questions down below, you can always ask us those questions too. So we're here to be your lending source to help you with finance. And I got a lot of interesting stuff I want to talk about tonight. And so and if you have questions, like I said, just chime down below and I'll answer those questions for you. My stuff's going to be more broad based on the global economy. Things that are going on right now with the Federal Reserve, interest rates. Some things that, there are some things that are specific, like, I did one thing I want to talk about tonight, some of the top most affordable areas in America right now. If you're looking to purchase properties, whether it's primary or rental, there's some interesting data on that. And then also kind of what happened this week, in the market with, the Federal Reserve and interest rates. So I thought that was interesting and how the market responded to that. So that's kind of the agenda for tonight, what we're going to be discussing. So appreciate all of you guys watching the show and the channel. So kind of what happened this week with the Federal Reserve. If you guys were watching or you weren't watching, the Federal Reserve decided to pause interest rates for the first time in feels like a long time, feels like forever. So they didn't raise rates this week, but they did hint that there could be 2 more rate increases for the rest of this year. But they also said, I don't know if you guys, you can find this stuff anywhere on Yahoo, MSN, Google, but they did indicate that they're planning to lower rates next year. Now, the market initially kind of sold off, which was kind of a surprise, but nobody ever knows what the market's going to do. But it seems like it's rebounding. So, rates right now are on the downtrend. They've been up for the last month, but they've started to tick down. So, and obviously that's not for all loan programs. Some programs, like non-QM or private loans, that doesn't really apply. But, conventional conforming loans, rates, have kind of ticked down a little bit. So, and in fact, that's kind of what has kind of spurred some of the growth right now. Well, there's a few things. So, you have home prices that have come down a little bit, right? So you have home prices that have come down collectively over the nation, anywhere from 5 to 10%. So let's just say you're buying a $700,000 home, and the price of that house decreased by 10%. Then it goes from 700, down to 630, a $70,000 decrease. The affordability, the payment is going to be cheaper. Your debt ratio will be less affected. However, you do have higher interest rates historically compared, like 2 years ago, you could get a 4% rate. Today, rates are whatever, 6 or 7%, depending on what program that you do. So, but what we found is that what's happened, like especially in the last month, loan demand or, real estate demand has kind of skyrocketed. And this is, information according to MSN that we've aggregated that, loan demand is up by about 6% right now. So that's for refinances. For purchases is up by 8%. So that's positive, right? That's a good thing. When you have more people out there that are wanting to buy houses, that are wanting to refinance, it's encouraging, right? So because interest rates have come down by about 5 basis points, so that helps for people to go out there to whether they're looking to purchase or refinance. And so kind of the thought process, I mean, and nobody knows for sure what's going to happen, whether the Federal Reserve is really going to act on what they're saying, if they're going to keep raising rates. They hinted at 2 more rate hikes this year, but I mean, nobody really knows for sure what they're going to end up doing. So, whether they raise rates or not, I mean, the thing is, like I've always said, you have to actively be involved. Whether you're flipping properties, you're buying long-term rentals, or you're looking to purchase your primary residence, there's always going to be opportunities. You're never going to be able to time the market. You don't know what's going to happen. But if you find a great deal, you need to act on it. Because, I mean, that's really, in the end, all that you can do. If real estate values are going down, they weren't going down, 2 years ago, they were going up. And now real estate values have come down. And really, net on net, the payments are fairly similar. So meaning that, like, if you bought, 2 years ago, a $500,000 home with a 4% rate, today you're buying a $400,000 home with a 7% rate, the payments are very similar. So, and then the other thing is that you can always refinance when rates go down. If rates do end up going back down to whatever number, then it would be justified to do a refinance. So I think it just depends on your situation and where you're at. And also what you're looking to do. I definitely wouldn't be blindly buying anything. You want to buy things that make sense, great locations. A great location, that's the whole thing, right? Land's fixed. You can't add more land, at least right now. I mean, I guess there are some countries that are doing that, and I guess in the ocean where they're, adding more land, but realistically, you can't do that. So if you find something that's really good, you should purchase it regardless of what's happening in the market, because it's a great opportunity for you. And you would hold on to that for the long term. And you've seen over time, real estate values do appreciate, they do go up in value, and it does make sense to own American real estate assets. So that's kind of what my thought is, and it's always been that, whether you're purchasing, you're investing. So, but at the end of the day, that's kind of what has happened for June. Interest rates have come down a little bit. The Federal Reserve has decided not to raise rates. They're temporarily doing a pause on that. And as a result, real estate loan demand has gone up. It's surged, for this month, and rates have come back down. So if we can help you, with loan funding, call or text our office. You can reach us at 832-431-6331. We definitely want to help you to get you the funding for you to be able to purchase your property. So we do all different types of programs, as you guys know: FHA, VA, USDA, investor loans. We do the doctor loans, we do construction loans, we do land loans. So we definitely love to hear from you if we can help you with any type of financing packages. So that's that. Shifting gears, I did want to talk a little bit about, like I said earlier, about the top most affordable places. If you guys, this is something that, people always complain that real estate values are skyrocketing. They can't afford property. They can't afford a home. And I pulled this off of an archive off of MSN about the top 10 most affordable areas right now in America, where the home prices still make sense. Because that's a big argument that a lot of people have, is that, look, real estate prices are too high. I can't afford anything. I can't do anything. I'm just going to be stuck here renting. And the thing is that you can do something, if you look in the right areas. Now, some of these areas may not be the right place for you, but for some people they are. So I thought it'd be helpful to talk about the top 10 most affordable places right now in America. And some of them are actually, in my opinion, aren't that bad. Some of them I'm not too familiar with, but maybe they ring a bell to you. We lend nationwide, so it doesn't make a difference to us. But the first one that came on the list was Palm Bay, Florida. Palm Bay is a great area. I know it. I don't know it very well, but I'm very familiar with Florida. And Palm Bay is a great area. So that was one that was, the median home price was $222,000. Springfield, Illinois was the second place. Median home price was $242,000. And guys, that's actually, to hear anything in the 200s in the last 8 years is amazing, because before, now right now you really can't find anything for less than 300, but back in like 2015, 2012, you could actually get a good house for 200,000. It's been a lot harder recently. So Springfield, Illinois, number 2. Yuma, Arizona. I'm surprised anything in Arizona is still in the 200,000 price range. Pittsburgh, PA. That was a little bit of a surprise to me. I thought Pittsburgh was more expensive, but they're saying that Pittsburgh is still a sought after area and it's still affordable. Warren, Michigan. Flint, Michigan. 2 places in Michigan where home prices are still really affordable. So anyone down, I'm sorry, 3, Detroit too. Detroit, Flint, and Warren, Michigan. 3 places in Michigan where the home prices are still affordable. So that's good, right? And then there was 2 places in Ohio, Toledo and Akron. So Toledo and Akron, 2 places where the median home prices are still wrapped around, 200,000 plus or minus. So that's encouraging. The other one was, and then, Montgomery, Alabama. I could kind of see that about Montgomery. I've been there a few times, and, I think that in the long run, Montgomery is going to be definitely a place where the real estate values go up. But right now, it's still affordable. So that's the top 10 most affordable right now in America. And, some of those places, if they work for you, I would definitely, jump in and take advantage of it. We can we do loans, we do FHA conventional, we do non-QM. We can help you, or, investor cash flow, if you want to buy properties in these areas. Maybe, and ultimately, some of these locations are going to be emerging markets where they're going to be growing. And it could make sense whether you're trying to buy a rental property and you want to invest and you want to grow your income. So take a look at those. If we can help you, reach out. Don't be a stranger. The other thing I did want to talk about, kind of to move into, was non-QM loans, because it's one of my favorite products and kind of the future of non-QM. And those of you guys that know, and obviously you can watch our channel on YouTube. We've done several videos on non-QM. Non-QM stands for non-qualified mortgage, and basically, this was kind of put into play to kind of, counter the Dodd-Frank laws, to come out with more innovative products for people that are, they can't document their income, the conventional standard routes, or their situation doesn't meet conventional requirements. So lenders came out with some innovative ideas to kind of work through that, and it's turned out to be a phenomenal success. In fact, in 2022, non-QM was accounted for over 100 billion in lending. So 100 with a B, not 100 million, 100 billion of lending in America. So it definitely makes sense, and I think you're going to see more of this in the future, and namely because there's a few things that these loans are performing. Number one, this isn't like the subprime where they're high risk loans or high leverage, and the loans weren't performing. These loans are lower leverage, less risk. There's still accountability, and then the loans are actually performing. So meaning that people are making their payments. And again, non-QM, this is, you see, for example, let's say somebody works a job and they are a pharmacist by day, and at night they're an Uber driver. Well, the Uber income is 1099, and it's very hard to document that income if they want to go buy a house through their bank or get a conventional loan. Or a non-QM loan will accept the Uber income, or you have a guy that owns a painting company and he does, his business is all cash or partial cash and this and that, and a bank doesn't want to deal with that. The non-QM loan will take the bank statements and use that for the qualification loan of the deposits, whereas a bank will never use bank statements to qualify without the tax returns. So non-QM loans make a lot of sense. And then, you have some cases where investors want to purchase properties and they have too many properties, like the max is 10 for conventional, but they have 11 or 12 or 20 or 1,000 non-QMs there, it can help that investor to purchase more properties, right? So that's where non-QM is going to be very strong for self-employed people with side gigs, for investors, right? Or and sometimes even people with lower credit scores. However, there's going to be adjustments to the loan to value. That means that you're not going to get 100% financing with a non-QM. You're going to have to put money down. Usually, they lend up to 80%, sometimes less. So, but these loans, the people are making their payments because they have skin in the game, and the deals make sense. So, and we do a lot of non-QM loans, and if we can help you with the non-QM, and non-QM isn't a bad word, it's not a taboo. It's just an innovative alternative financing product to help people that are in that situation, whether they're self-employed, they're investors, or whatever. And I love them. I think it makes a lot of sense because people's situations are very complicated. They got all kinds of stuff going on, and you need a non-QM product there to help people to be able to get the financing, because a lot of times conventional or FHA or whatever doesn't make sense. So if we can help you with those programs, reach out to us. We want to be here as your source for financing. So I'm glad you guys all tuned in tonight. I appreciate all of the support with our channel. We work very hard to build our channel and our following. Educate you guys, empower you, give you the information. So if we can help you with anything in the future, please reach out to us, 832-431-6331. Don't be a stranger. Call or text our office. You can check us out on our YouTube channel, Angelo Christian, Instagram, Angelo Christian. I think, on Facebook. You can check us out there, Twitter. And we produce content over there, every week. You can check us out. We've been lending nationwide for over 2 decades. So, don't be a stranger. We'd love to hear from you to help you with the different financing loan programs. So, appreciate all of you guys watching the show and the channel. We'll be back next Thursday at 6 p.m. Central. So, thank you guys so much for watching Angelo Christian. We'll see you guys next week. Take care and peace out. Bye-bye.